Hey everybody, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen, Wednesday. Look, we are back into the tariff madness and we are back into this whole US-China, China-US standoff. And look, it's going to be an interesting one. I think another one. It was an interesting moment before. I think it's going to be, it's going to create some volatility until we see the Fed stepping in. But also the other problem is that we don't have a U.S. economic data, the majority of it. So, CPIs, we don't have those. PPIs, we don't have those. And I'm already not talking about the NFP. Anyway, look, about all this and a little bit more in my session right now. So this is a quick little video preview if you haven't guessed. But hey, stick around. Hopefully you'll enjoy it, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is, Wednesday, the 15th of October, 2025, still. Look, we're midweek, right? I mean, let's see what's happening in the markets. I mean, there are a few things happening here and there, of course. As always, we don't have an easy week lately, or actually since January probably we have not been having an easy week. Okay, look, there are a few things to talk about. There are a few shifts and moves in the market that we need to address. But before we go any further, as always, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, actually, what I'm gonna do here, I'm gonna do my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. There we go. Boom. Look, as I keep on saying, this session is made for interaction. So look, I mean, you can ask questions. Feel free to do so. I think that's a good path to go. Maybe you'll tell me something new. I have not known about. So it's beneficial. It's been beneficial for both sides. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also the upcoming webinar, which I'm going to be doing on the 30th of October, and it's going to be on Bollinger Bands. Basically, it's the third episode in the series where I pick up on the top used indicators, which are available for traders, and we look at how it works, and then we basically try to apply it in real life market action to see if it actually, if it makes sense, if it works, if it's worth using. So yeah, join in. I'll be more than happy to see you there, so you can always ask questions in there as well. So hey, you can find the link in the description of this video. So ladies and gentlemen, economic calendar, very quickly, just a quick little update on today. And what did we get today this morning? We got the Chinese inflation number. Look, a little bit of an improvement on the year-on-year side, if we're comparing to the previous figure. Also, the same story on the month-on-month side. However, the forecasts were a little bit on the higher side, to be honest. But okay, we're still better than the previous, so that's fine. PPI is also better than the previous figure. Came just perfectly in line with the forecast. And in general, I would say everything is fine, everything is good, but no. The thing is that we need to see a little bit of growth, and we need a little bit of a higher number than this. And if we don't get a higher number than this, then kind of it gives this an indication that there is a bit of a slowdown in growth. No, the market is still growing, but it's, there is a slowdown in growth. So we're always like looking at, the pace and how the market grows, how the country grows. So so at this point, I would say China is still holding on, but certainly those these tariffs are not really helping out much. Now look, the whole situation with tariffs right now, then that the White House administration came out just recently saying that they're going to put a ban on cooking oil, which is imported basically from from China. So it's it's an interesting moment here. Of course, it's an interesting battle. I saw I saw that there were comments by the White House leader that that he suddenly doesn't understand where this hostility is coming from. Why suddenly you're seeing, where suddenly there is this, China is decided not to, purchase soybeans from the U.S. Look, you were slapping tariffs on, on the country, and now suddenly, you're wondering where it's coming from. I mean, it's a little bit of a I don't know, like a weird way of thinking in a way, but in a way, like if we're talking, like kindergarten style, then well, you started it. So look, long story short, for now, we're watching this new feud. Like I said, the soybeans, cooking oil, these commodities. But in general, we understand that the two cannot really survive without each other. That's for sure. That's. I mean, it's already like a constant. It's like a given. And okay, they will continue fighting. Once again, they will reach an agreement after later on when they will realize that one needs rare earths, the other needs the U.S. consumer. So. That's the moment. Like I said, that's the kind of the deal, the package, the path we're going. Anyway, started stumbling here, mumbling. Look, long story short, for now, if we're watching the markets here, the market seems to be kind of shrugging off this idea. Yes, it's not a good idea, it's not a good thing that's happening, but the market seems to be like not caring, because looking at Nikkei, it's still pumping higher, even though industrial production from Japan came out on the lower side. We're having this, move back up here on Nikkei. We're having this move back to the upside on the Shanghai Composite. And of course, a lot of people are attributing this to the fact that yesterday Jerome Powell he gave a speech, and he sounded a little bit more on the dovish side, and we're thinking that that he's going to go for more cuts in a way. Again, that's the idea at the moment. Look, let's have a look at the FedWatch tool. At the moment, we are not really expecting to see more than one cut during the October meeting. Right, there we go. However, the market is still speculating that maybe we could see that those two cuts coming through in October and then one maybe in December. But to be honest, I think that they're going to just stick to the current plan. One in October and one in December. They don't want to overdo it. I think. Yeah, it's otherwise inflation is going to start picking up very quickly. Although there are some critics say that maybe inflation actually is going to go down because again demand is going to fall. I don't know. I really don't know. I think demand is still somewhat there, but I think the prices are just getting overinflated. Everybody's trying to maximize their profits as right now because in anticipation of a possible maybe bigger market correction or something like that. But long story short, again, don't want to be a pessimist here. Long story short, for now, watching this very carefully here, the Nikkei, like I said, is showing signs of possible move higher. However, if you remember on Monday, I talked about this and I said, look, we have ourselves a rising channel. When we look at the prevailing trend, the prevailing trend was to the upside, but this formation, this specific formation looks more like a bearish one because it's one of those scenarios where, let's say you have a strong move higher, then a gradual move higher, then followed by a correction lower. This is exactly what happened. So great result here. This level here doesn't carry anything. This is where we found support near the 46,000 kind of 593 territory. We rebounded from it, we're pushed back up, so now we're a little bit stuck here, and we are stuck right here. We're stuck between these two levels, the 46,593, which I just mentioned, and the 47,728 as well. So keep your eyes on that. This channel no longer needed. We can get rid of it. But what I can say here is that if we do push above the 47,728 zone, then yes, great. I'll consider a move higher. For the downside, a drop below this area, below this 46,593 could attract a few more sellers, and we could see a larger correction back down. Shanghai Composite, yes, pushing back above the 3,888 zone. So okay, this was my barrier. I'm leaning towards the towards the upside, at least for now, as long as we stay above this hurdle. Let's jump into the U.S. market, ladies and gentlemen. So yesterday, indices performed flattish, apart from Dow. Apart from Dow. Dow was in the positive territory, Nasdaq was in the red, S&P was also in the red. But the Dow, yes, managed to rebound, managed to push back up. Let me just get rid of this highlighted zone. We managed to test this downside line that I've drawn from the high of the 3rd of October. And the question now is, let's say if we can, break through this downside line, I will consider a move higher. But look, we're at a very interesting spot here. What I talked about on Monday, I said from the very, very short-term perspective, if we do pop back above the 45,785 territory right here, I'm going to lean towards the upside and I'm going to aim for this downside line. Boom, mission accomplished. Now, like I said, I need to see what's going to happen with this downside line. Look, we could bounce around here because again, we need some sort of like a catalyst here, but economic data for sure it's not that for sure, because look, the U.S. We have an issue with inflation numbers. We're not getting those. We have an issue with the PPIs. Look, next week, I think next week on Thursday, we should be getting the U.S. Was it Wednesday? So okay, where's that initial and continuous jobless claims? No, I think there's gonna be, it's gonna. Once again, you see, we don't have the numbers. Let me just double check the calendar here very quickly. So for today from the US, we have the MBA 30-year mortgage rate. Okay, that has been going down. That's probably the only number, one of the only numbers that's coming out. We have, look, this is what I was saying on Monday. We have a bunch of Fed speeches, and I think that we need, just to fill up the market because we don't have data. So that's why the Fed officials are probably giving those speeches, because again, some sort of volatility is needed in the market, something for the market to pick up on. In terms of other, PPI numbers, there we go. We should be getting some on Thursday, but we're not. Initial and continuous jobless claims. Look at the backlog. We already have 3 in here. So we have a backlog of the numbers, and we're not going to go get those as well because the government is still in shutdown mode. PPI, this is something that we're watching. PPI is expected to come out the same as previous, but we don't know how it's going to come out. Again, you see some Fed speeches here, just to kind of keep the market running, just to kind of have something in general to pick up on. Friday, we don't really have much. Housing starts, but those are not going to come out. Building permits, I don't think those are going to come out. So fun times we're going through. So that's why everybody's picking up on, the tweets, the posts, and that's why I called my my Mondays Mondays show the power of the post. So yeah, this is at the moment what's running. Anyway, but in general, it's not a bad thing as well. Why? Because we're focusing on some other markets, and we can also focus a little bit more on the technical side, especially on indices. So look at this. Dow is perfectly fine, working out nicely. S&P, let's have a look at this one. I talked about S&P. I need to push above this. I needed to push above this barrier, above this hurdle here, this 6,619. We got the move. It pushed higher, but then it struggled to go over this 6,699 zone. We can round it up to 6,700. We failed to overcome that, or should I say, we failed to overcome that, and we drifted back down. So look, if you want to go for some higher levels, I think that's easy here. You need to kind of wait for a pop above this hurdle, above the 6,700, and then we could go consider a new all-time high. NASDAQ, very quickly on NASDAQ, good result yesterday, pushed higher. Look at this, made its way back to the 24,781, but then failed to reach that actually by a few points, and then retraced back down. Look, long story short, I think that just given that we don't have given that there's an absence of the data, of economic data, then I would say if we can clear this hurdle, this 24,781, then yes, I will consider a move to the upside again. So yeah, that's really a simplistic approach on the US indices, and to be honest, I don't want to overcomplicate this because, well, the world is already complicated enough. So let's approach this from a little bit of a more careful side, and just go from there, go from the technicals. The German index, let's have a look at this one. What's happening here? Look, yesterday it declined, tested the 50-day EMA together with the 20-day SMA here within the Bollinger Band, rebounded, pushing back up, but we are in the falling channel again now. We are within this formation, so the question is, can we overcome this, this upper side of the falling channel? If we can, great, I'll go higher. But if we cannot, maybe we're going to be, waiting for some sort of a catalyst. But certainly Europe is a little bit problematic right now, especially with France. That's kind of spilling over, but certainly we're also, don't forget that we're in the earnings season, and yep, big boys are delivering their earnings, and one of the companies that we're watching is the ASML, because everybody's talking about it, and this is where, look at this, the company delivered already, and beautiful jump to the upside here. And hey, gapped up. Most likely will fill up the gap a little bit here, but not full. But then it could actually continue pushing higher. So yeah, one of the big giants in Europe here, ASML. So good result, good performance. Question is, can it sustain those performances? The FTSE 100 kind of trying to push higher. However, my problem right now is from the technical side. We have a big candle to the downside, and then if we have the 3 gradual candles here to the upside, but those 3 candles, those bodies are within the body of the first candle, the 5th candle tends to be to the downside. So just keep that in mind. Very quickly on DXY, dollar index drifting back down. However, I'm not giving up on the US dollar yet, although I'm bearish. I'm not giving up on the US dollar in the short run, because I still believe that this one has potential to drift towards that 100 level. Again, as long as we stay above the 100-day EMA, above the crossroads of these 2 trend lines, yes, I'm going to remain somewhat positive, and I'm not saying that this is how to say it, it's correct that to think that it's going to go higher, up in a way. No, because we have upcoming rate cuts, but in the very short term, I mean, maybe for this week or maybe next week, I'm kind of expecting this one to still remain somewhat elevated, just because we know that the rate cuts are happening. We know that there's going to be one in October, there's going to be one in December, and that's not good for the US dollar. But before that, yep, maybe we could, the US dollar could take advantage and kind of retrace back up a little bit. And also, maybe, just maybe, it could, take kind of look at, kind of get the safe haven status, the lost safe haven status, which it had. Maybe it can regain that, and for at least for a time being, so we'll see. Anyway, well, let's see if this is gonna play out this way. However, if we start crossing and we below the crossroads of these two trend lines, and we stay below those, then yes, I'm going to consider. Unfortunately, I'm going to consider a move to the downside. Just have a quick glance at VIX. Yesterday we had a pop here, but yeah, it's still around 20. It's going to go down, I think, unless we continue to get the feed of tweets and posts, kind of saying, how much more tariff they're going to put on China. Anyway, needed a little bit of a sip of tea. But anyway, let's jump into the currency world, ladies and gentlemen. Let's have a look at what's happening here. AUDUSD pushing back up, but still, I mean, this was a good rebound. I talked about this. If you remember last week, this week on Monday, I said that if we do drop below the 0.6520 here, I'm going to lean towards the downside. I'm going to consider a move towards this upside line. There we go. Tick, mission accomplished. Great move. Now, what's next? Next is, let's see if we can get a break of this downside line right here. If we can get a break of this downside line, wonderful. I'm going to go higher. But for now, I'm just going to probably observe the price action. And if I'm looking for some lower levels, a break of this upside line taken from the low of the 24th of April is required. So this medium term upside line, is a break of it is needed in order to go lower. AUDNZD, one of my favorite ones. Right, okay, this one is stalling a little bit and kind of forming something of a range here. So while we remain, let me just grab a horizontal line. While we remain somewhere in here, somewhere in between, actually, you know what, we don't have really a very good level here. Okay. Okay. Then this is becoming very subjective. Well, actually, everything is very. But look, I mean, roughly. Okay, roughly between the 1.1315 and 1.1418 levels. That's where we're currently stuck. So we need a clearance through one of the sides in order to consider the next short-term directional move. AUDJPY very quickly. A bit of a roller coaster ride, choppy sessions we're seeing, but again, like I said, those are fueled by posts. Our risk on monitor here, which is the AUDJPY, indicating currently that there is a little bit of weakness in the market. Well, actually, we can see that from the stock market. So far, so good. I think that there could be a chance for this one to drift further south, but the further south is kind of limited, could be limited to this upside line right here. So it's a bit of a tentative one. Maybe it should be drawn this way, actually. But certainly it's something to keep in mind. It's, like I said, it's a little bit on the subjective side because I'm capturing, not the lowest points here. So, but at least, this kind of captures more touches. It has more touches, this trend line. And it coincides nicely with the 50-day EMA on my daily chart. Let's jump into EURUSD, ladies and gentlemen. So let's have a look at what's happening here. Beautiful rebound, but we're still below the downside line. And in a way, as long as we stay below the downside line, the trend remains, the near-term trend remains to the downside. However, I need to drop again below the 100-day EMA shown as the blue line here in order to get comfortable with the downside. If I don't get that, okay, fair enough. I mean, there is a chance for a break higher here, but again, I need a break in order to get comfortable with the upside. 1.1645, a break of that I need in order to shift my attention to some higher levels. EUROJPY very quickly, one of my favorite ones lately. This one's still holding above the 175.43 zone right here. And look, this level is the highest point. This is what I want to show you. This is the highest point of 2024. So we are still above the highest point of 2024, but we're struggling with the this hurdle here, the 177.91. Yep, and that's the highest point of January of 1991, ladies and gentlemen. Yep, in general, the highest point of 1991. That's where we are now. We came. You see, this is the thing. We tested that area beautifully, 1991. And yep, we can retrace back down. So talk about, technical analysis, right? Now I love technical analysis like this when we are testing levels, from 30 years ago. And yeah, that's more than 30 years ago. And that's quite significant. EURUSD, very quickly, this one's pushing higher and it wants to go higher. So I said to you, if we do push above this 2.0310 and we stay above it, I'm going to go further north. For the downside, I need to see a drop below this psychological 2 level in order to shift my attention to some lower levels. Looking at the, let's jump into GBPUSD. Beautiful rebound from this 200-day EMA. We're still below the downside line, so yep, there could be a chance for a move lower. A drop below the 200-day EMA is needed in order to shift my attention to some lower areas, but for now, I'm just being very careful here. For now, if we do go and push above this downside line, which is taken from the high of the 17th of September, and we push above the 1.34 zone, then yes, great. More buyers here could join in. GBPJPY, beautiful hold up above this 201.26 zone. That's great. So this is, I said to you on Monday that this is my hurdle for the downside. If we can get that move, great, wonderful. More sellers here could join in. Just let me just double check something here on the UK side. So we have some speeches here, but I wanted to check some data. Average, oh right, okay, employment change. This is what I was wondering. Unemployment rate yesterday, it ticked up. Now that's not a very good thing. However, on the other hand, maybe the bank, the BOE could cut some rates in order to boost, the economy a little bit. Yeah, certainly the job numbers are not the best, and average hourly earnings, let's have a look, including bonus, they increased. Wow. And average earnings excluding bonuses, they decreased. So, okay, so the bonuses increased, right? Okay, okay, sure. Rich get richer and poor get poorer. Anyway, employment change, that's a disappointment. So, that's like, yeah, so in the employment change refers to the 3-month moving average compared to a previous period in the number of people in employment aged. So we are seeing a big decline in general from the previous. So it's a common tendency right now with the job numbers in the developed countries. So yeah, it's a tricky one for them right now, because again, the job number, they're not creating more jobs, they're not firing much. So that's why unemployment is not spiking, but they're not creating more jobs, and it's understandable because in the age when everybody's pouring money into AI, you understand that the entry-level jobs are disappearing. So but everybody has AI. Okay. Anyway, jumping into USDCAD, looking at this picture here, we had a good run. We cleared the 1.4016 zone. We still remain above it. So as long as we stay above it, I'm going to continue targeting the upside. Let me just double check for a possible next target. Maybe this one, 1.4151, could be an option here, but I don't want to rush into things. It's okay with USDCAD. It's a little bit tricky here. There's a bunch of hurdles which I will consider, but probably the first one I will consider the 1.4151, and then we'll take it from there. USDJPY. Now, this one declined and it dropped below the 151.11 here, but it failed to stay below it. So, I mean, there is still a chance for this one to rebound back up. However, I think that the market now, given the whole kind of China-US tariff feud. I think that the Japanese yen might pick up interest, might pick up buying interest, not much, but just like slightly, you know. So then just be careful with that, maybe because like I said, maybe investors will remember that, hey, oh, Japanese yen, it's a safe haven. Wow, let's jump into that one, right? So maybe they will finally remember that, and you know, the Japanese yen will be saved just automatically. Because again, we know that for now there is this moment that, okay, we're expecting a rate cut, sorry, a rate hike in, let me just double check. I think it's going to be Thursday or foreign stock. BOJ interest rate, yes, Thursday the 30th. So exactly when my webinar is coming out. So yes, check it out. But yeah, in interest rate decision, we're expecting a we're expecting a hike. Let me just double confirm that. Next week, this month. Let's have a look. So the 30th, October 20. Okay, all right. Okay, no, it's not showing me this way. That means I will have to go in another way. Yes, okay. So okay, interesting how everything has shifted. So this is what I was saying. So if you remember, in the beginning of this month and last month as well, at the end of last month, I said to everybody, we are expecting a hike, a 25 basis point hike. But given that there is a new government that won, and the fact that the new leader, Sanae Takaichi, she's in favor of rate cuts. So maybe they will reach an agreement somewhere, like, and the bank is not going to go for an interest rate, you know, either cut nor hike. And exactly this is what I'm seeing right now. So at the moment, the forecast is that there's not going to be anything. But before, we had a forecast that there will be a hike of 25 basis point. Interesting. There we go. So that, okay, that should not be good for the Japanese yen. However, we're seeing a little bit of strength against the US dollar here. Look, again against the euro, we are seeing again it's somewhat strong. Against the Canadian dollar, it's stronger. Against NZDJPY and the NZD, it's stronger. Against AUD, it's still somewhat stronger, but maybe, like I said, maybe it's going to be saved by default, just because, like I said, the stock market could reverse lower. Let's see. That's going to be an interesting moment there, and certainly we're currently living through some interesting times and some historic times. So be very careful. Have your stop losses in place, of course, you know, and don't over trade. USDJPY, so yes, look, I mean, there is a chance for this one to drift lower, actually, although I was hoping to see the US dollar, you know, picking up the pace again a little bit in the short run, up until, you know, DXY, and up until 100 maybe. So maybe this could help out, but maybe this is where the point where the Japanese yen will still outperform a slightly stronger US dollar. So could be, we could see that little concept playing out. USDCAD chef, now this one's an interesting one. I am still targeting this 100-day EMA. I really want to see a test of it. Look, we had a good run here up to the upside. Let me see if this is going to carry any significance. Right, okay, so we're getting a little hold up here near this upside line. If this upside line holds, I will consider a move back up. And I think that 0.8076 is the one to watch for now. I have an alert here set at 85, but you know what? I think I'm going to drop it to like here, 76. So I think it's quite reasonable. So anyway, long story short, if we do clear this upside line and we stay below it, then yes, I'm going to lean a little bit more towards the downside. But certainly, yes, it's a tricky moment right now. I want to see if this is going to carry any significance. Okay, no longer it does. Okay, that's fine. We search for a new option here. But yeah, look, I mean, this is not the most exciting pair to trade. I get it, because it doesn't really have big moves like we don't see much volatility maybe in this pair. However, For those who are, you know, a little bit on the calmer side, maybe this could be an option for you. So, like I said, just kind of considering this this pair, maybe, like I said, it could, you know, it could play out. Let me just check actually from the okay, from the MACD and RSI side. Okay, look, there on the daily chart here, you can see that there is positivity actually on the side. Here we're seeing the signal line kind of crossing, the MACD is crossing the signal line. And actually, the signal line is also crossing now above zero, so that's kind of a positive indication. Let's see if that's going to play out correctly. Anyway, let's jump into, ladies and gentlemen, let's jump into actually US China. Okay, US Chinese offshore yuan. Right, we're seeing a little bit of a strengthening moment here on the Chinese yuan here. Interesting if this is going to be sustained. Anyway, commodities. Let's jump into commodities. 4,200, ladies and gentlemen. Ba-boom. 4,201 actually, new all-time high. But if you remember, I talked about this. Not only did I talked about this in my week ahead and my other videos last week as well, I also talked about this yesterday. I have this little video here that I produced, so you can check it out. It's on gold, silver, DXY, and WTI oil. I was also talking about this in my previous videos last week, so you can check those out. But yeah, 4,200, we've reached that one. So the next target for me is the 4,310. I think this is quite doable, because we are in a crazy market. And look, if you remember, I released a video called is 4,000 the final stop here, or is it just a pit stop, you know? So what I said, I was referring to the fact that it's going to be just a little bit of, it could be just a little pit stop, because we had scenarios similar where we were aiming for that 3,000, the psychological, and everybody was like, whoa, 3,000. But then we just kind of surpassed that easily and just continued rallying. So at the moment, I am targeting the 4,310, because why? Because that's the 261.8% on the Fibonacci extension. Actually, you know what? Let me just values percents. There we go. I think it's better this way. Yes, 261%. So there we go. So we did get that move. I'm sorry, we didn't get that move. We didn't get that test yet, but we're getting it. You know, we're traveling really nicely here to the upside, and I think that it's kind of a matter of time probably for it to reach the 4,300. Look, it's nothing, right? If you think that $100 now for gold is a lot, no, that's kind of it, because percentage-wise, it's from where we are right now to this level. It's only 2.6%. So gold does that, you know. Look at things percentage-wise now. But the problem, like I said, if you're comparing your trading of gold to your gold trading 3 years ago, and you're thinking, wow, $100 move in gold, that's like a lot. No, it's nowadays is just it's a regular Tuesday. So look at this daily chart here. I mean, it's a regular Monday even. Let's say from here 4,000 all the way to there we go 100. It's fine, right? It's a new norm. It's a kind of a a new way of looking at this. So 4,205, we're looking at that, and it's unstoppable. I think it's going to continue pushing higher, but again, I'm thinking that there could be a little bit of a hold up near the 261.8 zone. I'm not saying that this is just the ceiling, no, but a little bit of a hold up there, yep, could be the case. Silver, while I'm on a monthly chart, I mean, look at this. Look, we on Tuesday. Yesterday we created a new all-time high in the early hours morning, 53.57, 58 zone here, the all-time high. Now we're pushing back to it. Look, in general, this is crazy, right? I mean, in general, this is, this has to stop at some point, but is it time now for it to stop? Because we're going through history here, and this is the third massive parabolic move that we're seeing here. If we measure it from these lows here, we look at, I was talking about this yesterday in my video. So we're doing quite a lot. So first, in this first move that we had in 1980, silver jumped like around 600%, right? Now then in 2011 we jumped around 400 500%, depends on from where you're measuring this, and now we're jumping around 300. So it's the parabolic move remains the same, is just that the percentage is kind of shifting lower. So next time, after a few years, after a few decades, we'll probably see silver jumping again like that crazy. But the percentage, how much it will change, how much it will jump, will be lower than this, because every time it's, like I said, it's a different scale. We're like because the price kind of here remains, it's growing, but then the shift, it's proportional. Then the shift, it becomes not as big of a percentage. Depends again from where you're measuring. You see, we keep on measuring this from from higher levels, so that's why the percentage kind of drops a little bit. Anyway, but the magnitude is still similar. Look, long story short, for now it's an interesting one. I'm watching this very carefully. A lot of people are watching this for a possible short here. However, I would say, we're not gonna lie. We're not gonna pretend that we're not really thinking of shorting this one, right? We all know that. The only thing is that if you're gonna short it now, then you have to answer yourself: is this, is this the ceiling? Are we gonna actually, not go for a new all-time high? So let's face it, let's put it this way. If I'm expecting gold still to rally to that 4,300 zone-ish, it might actually not be the 300, might be close to that level. It might reverse back down, like without reaching that. So maybe silver actually could once again go and overcome, the current all-time high around 53.5 zone here, and go a little bit higher, test maybe the 54 or even 55, and then retrace back down. So again, just keep that in mind. Like I said, we're going through some interesting times, certainly historic times, and let's see if we can catch this one to the downside. But I have to say that it's gonna be tricky, because unfortunately we do not know how far it will go higher. Now, if somebody, thinks that, we're gonna go to 55 and that's it, we cannot, because this is unlogical and stuff. No, the market is unlogical sometimes, and you have to remember one thing, that if it started, going, and if you think that this is where it should stop, it will go a little bit more. It's always the case, honestly. And if you think that this is the floor, this is the ceiling, it will go a little bit more above or below that. Look, I wanted to quickly look at silver in terms of from the Fibonacci extension perspective, to see if we can find some sort of logic there. So basically what I'm going to do here, I'm going to take from the lowest point of 2020. You remember this level here when it was COVID time, we declined heavily, we hit the this 12 zone, a little bit less than that, and then we rallied. There we go. Look at this. So I'm going to mark the lowest point of 2020 to the highest point of 2021, and then to the lowest point of 2022. And what I get here is, well, I get 261, I get at 65.87. So somebody might say, but that's like a lot. So maybe it's not this, it's not this way you should be measuring it, right? Again, you see the Fibonacci extension here is subjective, because we start playing around with it. This to me looks logical, but the 261.8 here at 65, I don't know if it looks logical. I don't know if it's a correct way of looking at here. So that's why we can adjust this. But let me just get rid of this, and let me just have a look where we could draw this one from. So this does not count. So that means maybe from here to here. And to here, but then again, that's also like trying to see, trying to find something where it's not. So Look, I'll get back to you on this one. I'll do a little bit more research. If we can actually apply Fibonacci extension, or we should be applying something else, not a Fibonacci extension. On gold, it works, but on silver, it might not be the case. So I'll have to check some other indicators. Anyway, platinum, again, I remain on monthly charts because look at this. I think it's easier to show that this is a month. This is what's happening during a month. I mean, yeah, we're still to the upside. Palladium, I made the call and I said to you at the beginning of this month, I said, look, 1,250, that's the barrier for the upside, and because we're forming a double bottom, so this is a neckline. Boom. Congratulations to those who managed to enter the position here. Copper, in any way, I'm not inviting you to enter, but just like, we're looking at possibilities here, and yes, this palladium at this point, would I say, is it still a good one? Look, I don't like when if I miss the move here, then I would rather wait maybe for a little bit of a correction here. And another thing is, if I'm considering gold and silver to do a little bit of a correction, then yeah, I would say I'm considering maybe a correction back in palladium, but I'm not rushing right now in this one. Copper, of course, issues with issues between China and the U.S. are not helping here, and you saw this jumpiness here. On Friday we declined, on Monday recovered, so yeah, it's a mess here. So I would say just it's also due for a correction back down, but where is going to be the ceiling? We don't know yet. Jumping into cocoa, again, I remain on the monthly chart because I think for commodities right now, it's the best way to look at. So we continue to slide, but we're at a very interesting area of support, which is the lower side of the Bollinger Band here on the monthly. Let's see if we can reverse maybe back up going into November, but certainly at the moment it's difficult. Maybe it could continue sliding, so just for now the trend is to the downside. Just don't get caught in that. And if we're trying to find some sort of logic here, maybe trying to consider this as an option here, that means that we're at a very interesting area of support at this time. Let's see if that's going to hold. Sugar is drifting lower, and for sugar I need a daily chart. We dropped below the 16 zone. I talked about it, if you remember, on Monday, and we dropped below it and we drifted lower. So yeah, it's look, at this point I'm leaning towards the downside a little bit, towards the 15 zone. But probably in order to get a little bit more comfortable with the downside, a drop below the 15.10 here is needed. Soybeans, the big question here, what's going to happen with those? Look, at the moment we're forming something bearish here. It's a big pole, and this is a bearish flag, so we could see a move to the downside here. But again, let's not forget that from the technical side, we're still above this little short-term upside line. It could still, give us some sort of options, but probably don't forget that we're in a bit of a squeeze here. So we could see this one moving sideways a little bit. Jumping into wheat, not much. You actually probably let's stick to oil. WTI oil. So far so good. My idea here that I'm going to remain bearish, which I was talking about this idea for from the beginning of this year. And so far, like I said to you that I'm aiming for that psychological $60 mark, and there we go, we reached that. Then we broke it, and then I'm saying, look, I'm aiming for the $55 mark. As long as we stay below the 60, I'm going to aim for the 55 on WTI oil. On Brent, we dropped below the 65. I said that if I'm going to drop below the 65, the 62 is going to be my next target. Boom. The lowest point of, actually the low of the 30th of May of this year. So if we're going to clear this one, my next target is the 58.5 or something around here among these lines. So 58.7, something like that. So basically this area, I like this one. I think it's a good option here. Natural gas, still drifting lower. We're approaching the upside line here taken from the low the 25th of August. So hey, let's see if that's gonna hold. And finally, for dessert, ladies and gentlemen, the crypto world. Yeah, this one had a decline yesterday, drifted lower. Look at the beautiful test of this upside line. Honestly, this is taken from the low of the 30th of August, and we tested that beautifully, rebounded, pushed back up, and now yeah, we're struggling to understand what's going to happen next. So what I'm going to do here is actually I'm going to keep an eye on this little hurdle. I'm going to keep an eye on this 116,000 zone. Look, if you remember, previously I talked about the 118, but now I like the 116 zone. So if we can get the 116,000 cleared, I will consider slightly higher levels. For the downside, a break of this upside line taken from the low of the 30th of August is needed. Bitcoin Cash, beautiful drop to the area near this 200-day EMA, so that's great. The question now is, can we repeat that? Well, my problem is that when I said to you that if I'm going to drop below the 533, I'm going to aim for this 200-day EMA. This is what I said on Monday. So we got the move. We got the drop here. Now the question is, can we see a drop below that 200-day EMA? So if you're looking for some lower levels, look, if you're in the short run here, then if we do drop below this 533, then yes, maybe more sellers here could join in, but it's a little bit of a kind of gamble here, of course. I think that if we do push, below the 200-day EMA, that's where I'm going to get a little bit more comfortable with the downside. But for the upside, a push above this area, above the 550 zone right here, I will consider slightly higher levels. Ripple is, it's teasing us, and still below the psychological 3 level and below the 200-day EMA, but certainly it is a little bit of a tease, and at the moment I'm being very careful with this one. If I want to go for some lower areas, I need a drop somewhere below this territory, below this 2.37-ish. And let me just drop the arrow. There we go. For the upside, in the near term, a push back above the 200-day EMA here could be a great option. Ethereum also, look, we're stuck here. I talked about this 4,275. I need a break of that in order to consider a larger correction to the upside, because don't forget we're still below the downside line taken from the high of the 24th of August. But for the downside, look, problem. I think that maybe this is the better option. 3,883. A drop below that could open the door to some lower areas. Litecoin. Okay, look, Litecoin looks a little bit better, but again, still there are risks. 100.50, I need a clearance of down in order to go higher. But for the downside, a drop below the 90 zone, I think that could be the better option. Dogecoin, stuck again. Look, I talked about it, and I think that yes, the game plan still is the same. I need a drop below the 0.1785 in order to go lower. For the upside, I need to see a break of that 0.2209 zone here in order to shift my attention to slightly higher levels. But then let's not forget that this move higher would be part of a larger correction to the upside. And Polkadot also did drop yesterday, closer to 3, but still remains above 3. So that's a good sign. But if we suddenly fall below the 3 level, then I will consider a move to the downside. Tron, look, it had a bit of a moment here. Good hold up near this 0.3080 zone, and if we're looking for some lower areas, then yes, a drop below the 0.3080 is required, and also a drop below the 200-day EMA here could be a good option. So I want to say that if we do drop below the 200-day EMA, I'm going to lean a little bit more towards the downside. I'll start looking at lower levels if we do drop below the 0.3080, but I'll get more comfortable on a break of this 200-day EMA. So yeah, ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I really hope you found it useful. Look, be careful today. Like I said, it's midweek. We could see some turnarounds, but certainly, actually be careful every day. at the moment we're going through some interesting times, and everybody's watching gold, everybody's watching silver. So just be a little more on the careful side. So join me on Friday for the weekly wrap up. We'll see how the week went through, and yeah, we'll go from there. So ladies and gentlemen, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Friday. Bye for now.